Practice while you can. You'll be entering the field in a bit.
Rally point marked for you.
Enemy soldier nearby. Enough training. Now you fight a real enemy. Your mission is simple. Secure more cash than the enemy.
Okay, let's drop here.
Drop zone marked for you. Now it's on you.
Mark a drop point for your team. You'll lead them in.
Made contact. Made contact. Made contact.
Traction standing by. Mark an LZ for pickup. Allied UAV overhead. Hunt them down. Loud and clear. Bird is inbound for catch collection. Enemy UAV active. Allied UAV overhead. You are now marked as most wanted. Well earned, but stay vigilant. Helo is in position for your deposit. Bag set. Allied UAV overhead. Hunt them down.
I'm driving. Hold on to your butt. Enemies right there. Target is definitely not friendly. I'm driving. Hold on to your butt.
Enemy UAV active.
Fucking bastard, where did he go from here?
Enemy UAV active. Enemy advanced UAV overhead. Be mindful.
I'll make you cry about it.
Bounty target is down. Marvelous.
Bullets everywhere!
Enemies right there.
This'll get you back in the game.
I'll make you cry about it.
Hostile attack chopper carrying cash. Their sky's about to fall. Allied UAV overhead. Hunt them down.
Marking the enemy target. Marking the enemy target. Enemies right there.
I don't know what the fuck you doing, guys.
Try again.
They never stood a chance. Let's get you home. Check your gear and weapons. We go soon. Enemy dropping into the AO. Practice is over. The real fight begins now. Enemy dropping into the AO. Your mission is simple. Secure more cash than the enemy.
Drop Zone set.
Set a
Let's
drop
get
point for
moving.
your team, soldier.
That'll come in handy.
Enemy soldier nearby. Positive ID on the bounty target. Let's make this quick.
Got movement.
Targets in my sights. I got you, buddy.
Enemy soldier nearby.
Running one more for you.
Getting hit.
I'll make you cry about it. Not your best day, huh? Rockets out. Ammo for you. 18 is primed.
Enemy UAV
Got
active.
Enemies right there. Under heavy rain
Allied UAV overhead. Hunt them down. Enemy precision airstrikes. Enemy dropping into the AO. Strategy standing by.
Enemies right. Rally point marked for you. Target is definite. Nope. Never mind.
He's on the roof. On the roof. Top of you.
Back in the base.
Contract time expired. The target's been lost. Enemy UAV active. Enemy dropping into the AO.
Targets in my sights. Enemies right there. Enemies right there. Ammo for you. Enemies right there.
Mark him if you see him. Mark him.
Marking the enemy target.
Target right here. Making a move.
Yep, on your waypoint. Marking the enemy target. Rally point mark. Contact.
Fucking guy, why are you jumping from high point, man?
Got a bounty contract here. Yep, on your waypoint. Target for last time. Made contact.
One more jumping, careful.
SMG located.
Enemy dropping into the AO. Hostile dropping into the area. Watch the skies.
Got movement.
Keep your senses sharp. An enemy team is tracking your location.
Target is definitely not friendly. Target is definitely not friendly. Marking the enemy target. Marking the enemy target. Enemies right there. Rockets out. Rockets out. Marking the enemy target. Marking the enemy target. Not cancel. Not cancel. Enemies right there.
Allied UAV overhead. Hunt them down.
Marking the enemy target. Crosshairs. Rockets out. Rockets out.
Enemy cluster strike. Watch your heads.
Made contact.
Enemy advanced UAV overhead. Be mindful.
Tracking advantage. Marking the enemy target. I'm on the shooter.
Keep moving. Enemy attack chopper is in the AO. Destroy it and recover the cash. Hostile dropping into the area. Watch the skies. Enemy team is tracking your position.
Marking the enemy target. Rally point marked for you. Marking the enemy target. Yep, on your waypoint. Yep, on your waypoint. Yep, on your waypoint.
Check your gear and weapons. We go soon. real fight begins now. Your mission is simple. Secure more cash than the enemy.
That's a tidy drop zone. Sending tear gas. Contact here. Stand up and fight. Enemy marked. Bounty contract. The hunt is on. Bounty contract. Tracking mover. The hunt is on.
Bounty target identified. Have a little
Sights on
fun,
hostile.
yeah? Keep your senses sharp. An enemy team is tracking your location.
Allied UAV overhead. Hunt them down.
Bounty target is down. Marvelous.
Frag on the way.
Heads down.
Fucking people, man. Motherfucker, son of a bitch.
Engaging hostile. I'm taking fire.
Enemy advanced UAV
Contact
overhead.
here.
Be mindful.
Grenades flying.
Hostile. Engaging hostile.
Stun in play.
Allied UAV overhead. Hunt them down.
Engaging hostile.
Why you hunting, motherfucker? Get out, motherfucker.
Hostile dropping into the area. Watch the sky.
Tracking mover.
Enemy soldier nearby. Enemy attack choppers in the AO. Destroy it and recover the cash. Enemy dropping into the AO.
I don't know what the cocksucker's doing around there. Fucking assholes. Get from your own shadow, motherfucker.
Back in action.
Enemy UAV active.
Tracking mover. Eyes
Enemy
on care
UAV
package.
active.
Bleeding bad here. Tracking mover.
Fucking dumbasses. I'm gonna block you after this game. Useless bullshit cocksuckers.
Fight isn't over yet.
Bounty contract. The hunt is on.
Have a little fun, yeah? Allied precision airstrike incoming.
Be aware. Bounty target is down. Marvelous.
Dizio'dan merhabalar sizleri bu videomuzda doğmuştur. Yeditepe Üniversitesi Güzel Üniversitesi Halkla İlişkiler ve Reklamcılık bölümünde okumuş. Yayınlanan Sil Başın adlı dizide oyuncular şaşırttı. Yorumlarda bizlerle paylaşmayı unutmayın. Sonuna geldik. Daha sonra Bahçeşehir Üniversitesi 1991 tarihinde Almanya'da doğmuştur. İstanbul Bahçelievler Anadolu Lisesi'nden mezun oldu. Lise eğitimin ardından İngiltere, London ve Amerika Kansas müzikal oyunculuk eğitimi bölümlerini tamamladı. Daha sonra Bahçeşehir Üniversitesi Mimarlık bölümünden mezun oldu. Pınar Deniz 10 Kasım 1993'te Mardinli ve Arap kökenli bir ailenin çocuğu olarak Adana'da doğdu. İstanbul Üniversitesi Halkla İlişkiler ve Reklamcılık bölümünde okumuş fakat mezun olamamıştır. İlk oyunculuk deneyimini 2014 yılında yayınlanan Sil Başın adlı dizide Evrim karakterini canlandırarak yaşadı. Bir videomuzun daha sonuna geldik. Sizleri
The house is located in the exclusive gated community of McDonald Highlands. From the exterior, we can see the beautiful modern lines of this home. Exterior is clad with smooth stucco, complemented with this meta quartzite cladding that we're going to see throughout both interiors and the exteriors of this home. Minimalist lines. Front is nicely landscaped with this drought-tolerant rock design, and I love how they use a lot of plants and trees that are native to Nevada's landscape. Right in the center of this home, we have this section that is a little bit more taller than the rest of the house. That's where we have the staircase and the sky lounge of this home. It's the third floor where you get incredible views, and we're gonna see that later in the video. Also, that section has this awesome butterfly roof design that we're gonna talk about later in the video. Now, on my left-hand side, we have the driveway taking us to the motor court of this home. And focusing this side, we have this covered entry with a steel panel roof that takes you to the courtyard and the walkway of this property. Gorgeous pivot door, steel framed, and I really like the mirror details that they have throughout. As we go in, walkway continues. Same meta quartzite that we saw on the exterior of the home. It's pretty much brought throughout the property. On my right hand side, we have beautiful planters with a corten still giving it that rustic look. And as we continue, corten style steel panels are throughout. That's actually the garage of this home, currently being used as the office space for Blue Heron, and I'm going to explain that more later in the video. And we have this reflection pool kind of setting the tone as you walk into the property. It's a beautiful detail that says that tranquil vibe. And I love, even with the pool, how they tie in these rustic steel panel details by cladding the exterior of the pool, as well as these grid details that we see on my right hand side. Following this hallway, we can see that substantial center section of this property right here. Beautiful steel details. Same meta quartzite is also here. And that pool that we saw overflows to this section here and continues into the other reflection pool, which is amazing. Now, we have this walkway here, and before we go into the main home, I want to take everybody here, and this is where we have the Casita. I said Casita because this is a detached structure right next to the home, currently staged as an office. I love this space because we have walls of glass bringing a ton of natural light to the interiors. We have a desk set up here, and just like that exterior walkway, they brought some of the planter details into this space as well, but rather than going with that rusted Corten steel look, they went with the blackened design, which looks a little bit more sleek and kind of cleaner. Another detail I really like here, closing this section, and we have another one on this side in case you want to close this walkway. Now you may ask why you want to close that walkway, because on my right hand side we have the primary bedroom suite, which we're going to tour later in the video. But I want to take everybody to the edge of this walkway here. So they have this massive reflection pool framing the amazing views of Las Vegas Strip. And I love this part of the home because you can see a lot of the materials and finishes they use throughout the property in this space, with the quartzite steel panels, glass walls. And I love how they framed this view, but yet still brought some of those Nevada native materials like the rocks, cactus trees on each side of this. The automatic sliding glass doors opened up, tucked into the walls, where you can appreciate these views even more. I mean, we have the entire Las Vegas Strip right in front of us. And since we're so high up, this space, this room just feels so tranquil and quiet, which is amazing. We have another infinity edge pool right in front of us. And we're gonna talk about this backyard and the whole setting in a bit. There are a lot of details there to cover. But first, I wanna focus on this seating section here. Again, it's all open. We have a ceiling mount TV on this side, which looks like it's literally floating. And it's actually right in front of the reflection pool that we saw off of the entry. They even put a sliding glass door right behind the TV that tucks into the wall, so you can kind of hear the water feature, water running right behind your TV. Again, also allows that natural light to come in. Seating section right next to the kitchen. And then Mikey, why don't we focus on this side for a second? This is the other corner opening up to another pool that opens up to that other section, which we're gonna talk in a bit. This house is just so crazy with all these room, by the way. Right behind us, we have the four. And just like the patterns that we've been seeing on the inside of the home, they have these walkways with gravels and rocks, again with materials all sourced from Nevada.
Billions of people just living out their lives, oblivious.
But this is the moment for you to show us what is real. I remember this.
So deja vu. And yet it's obviously all wrong. Maybe this isn't the story we think it is.
They taught you good. Made you believe their world was all you deserved. But some part of you knew that was a lie. Some part of you remembered what was real.
It's so easy to forget how much noise the Matrix pumps into your head. Something else makes the same kind of noise. War. What happens to Nia? The most important choice in Neo's life. It's not his to make.
She believed in me. It's my turn to believe in her.
Part of me feels like I have been waiting my whole life for you.
If you want to see Trinity again, fight for her!
I saw this in a dream. My dream ended here.
still know Kung Fu.
Dediğimiz anlara tanık olduk. Şok edici bir son haliyle kafamızda birçok soru işaretinin oluşmasına neden oldu. Yargı dizisinde bu kez yok artık dediğimiz anlara tanık olduk. Şok edici bir son Vicius'un intikam peşindeysen iki mezar kaz sözüyle başlayan senaryoda esasında hem Engin hem de Ceylin intikam peşinde. Yani
Son günlerde sınıf öğretmeni de ömrümün ruh halinin dalgalandığını söylüyor Yonca Hanım. Eğer yönlendirirseniz rehberlik bölümü olarak bize destek vermek isteriz.
Thanks for clicking on the link. In this video, I'm going to talk about some great topics that will help you grow your construction business and hopefully look at things in a much different way. Two really important things I'm going to talk about in this video. There's a lot of things that we could talk about and how to grow your business. But the two ones that we're going to stick to today, and then I'm going to make some other videos that'll help you and your construction business. The two most important things are process, and I'll explain what that means, and then capital, because in the construction business, it's a really capital-intensive business. But topic number one, is process. And so I've helped thousands of business owners and thousands of construction owners across the country grow their business. And the one thing that I see with a lot of businesses and a lot of industries, but especially in the construction space, is there's never really a focus on process, which is understandable. I mean, a lot of times when you start your construction business, it's you, yourself, and maybe one other person, and you're just focused on getting the next job, and the next thing you know, you're just inundated in the day-to-day and just on to the next job, and you're going from job to job. And a lot of people, whether in construction or any business, never stop and take a step out of the business to work on it. And I know it's not an easy thing to do, and it's easier said than done, but it is possible. One of the best books that I think I've ever read, which helped me build out amazing processes in my business and grow to about 100 employees, was this book called The E-Myth Revisited by Michael Gerber. I'll share a link with you later in the video, but this book is a must read for any business owner, but especially for someone in the construction space. And it'll really help you understand what I'm talking about and how to build out processes. And processes start with what happens from when the phone rings. Who's answering that phone? Who's scheduling the estimates? Who's scheduling the jobs? Who's putting the route together? Who's ordering the materials? Who's collecting on the job to make sure that it's paid? All those things require processes, and they're not, you can't really build them out over a night or a weekend. They take some time, and you'll have to always be improving those processes. But once you put those processes in place, you can move from business operator to business owner, and there's a major difference. And with process,
turns them on. Why does that make a difference for you? That's what growing is all about, selling more of what you've built.
Welcome back, everybody. Again, Eugene, CBS, Canadian Business and Enterprise Services. We continue our series of informational, educational videos about doing business in Canada, how to do it right. So, one of the first questions I've been asked by many clients or friends of mine is, what's the difference between provincial and federal incorporation? Like, I read the books, I read the guide.
Hi, I'm Joe from Avalon Accounting. Today, I'd like to talk to you about one of the biggest questions we get from small business owners, and that's, what's the best way to pay myself for my corporation? To start, and this is one of the biggest pieces of information you're going to get from this video, is that there's only two ways to pay yourself from your corporation, and that's salary or dividends. No matter what you hear about innovative, fancy workarounds on the internet, there are only two ways to pay yourself from your corporation. Okay, first up, should you pay yourself a salary? If you've ever had a job, a salary is going to be pretty familiar to you. What we want to cover today is what it means for you as a business owner and how it might be beneficial for you. All right, so the number one benefit of paying yourself a salary is that you get steady, predictable income throughout the year. There are other benefits as well. So number one other benefit would be that when it comes to tax time, you don't have a huge tax bill to pay. You have paid your taxes throughout the year and might even get into a refund situation. Another big benefit of paying yourself a salary is that you create RRSP room, and this helps you shelter some of that income from taxes and save for your retirement. Speaking of retirement, CPP is another big component of paying yourself a salary. So when you pay yourself a salary, you're also contributing to CPP, and you get that CPP benefit for when you retire. Lastly, a big benefit to paying yourself a salary and that steady, predictable income that I mentioned before is that banks really like this type of income if you're going to get a mortgage or a loan. So paying yourself a salary, at least some, shows that steady, predictable income and allows you to borrow better. As a business owner, here's what's really critical to know about paying yourself a salary. You will need to register yourself for a payroll account with CRA. This allows you to deduct income tax and CPP at source and remit those to the government each month. Now this is a big one, so listen up. CRA is relentless when it comes to wanting their income taxes at source, their remittances, to be remitted every single month, and the penalties are stiff. So make sure you have a system in place or somebody to keep you accountable to pay those each month. Another consideration is that you need to file a T4 every year. Now, if you have other employees, it's not going to be a big deal because you're already filing and you just add your T4 onto theirs. Now, here's a couple cost considerations for you. Number one is CPP. If you're paying yourself a salary, you're going to have to pay into CPP, and that's your portion plus the company's portion. So that's up to $5,000 a year that you need to pay into CPP. And depending on your philosophy, whether that's a savings or a tax, this can be an extra cost to you now. And lastly, another consideration is that you get a deduction for the salary that you pay yourself within your corporation, which reduces your income and reduces your corporate tax. Now this gets put onto your personal tax and you pay your income tax there. All right, so there you go. That's what you need to know about paying yourself a salary, and we're gonna move on to dividends next. All right, so paying yourself a dividend is a simple way of getting money out of your corporation and to you personally. There's lower costs involved in paying yourself a dividend, and one of the big ones is that CPP I talked about earlier. You'll save that $5,000 a year by not paying into CPP. But you'll also not create RRSP room, so you don't have the tax shelter of RRSP and saving for your retirement if you're paying yourself dividends, which you would get with salary. Next, it's much simpler to pay yourself a dividend. If you're a 100% owner of your company, you can pay yourself directly from your corporation to you personally and have a T5 filing at year end. That's one filing, and you don't have to worry about the administrative part of deducting income taxes at source, remitting every month, and having a payroll account. Now that all sounds great, but one of the big downsides is you're also not paying income tax every month. So when it comes tax time, you might have a very large tax bill that you may or may not have saved for. So knowing yourself is really important when you're paying yourself dividends. Are you the type of person that will put money aside every month and every time that you pay yourself a dividend so that you're ready for tax time? Or do you need more forced savings on that tax by paying yourself a salary and having income tax deducted at source? A couple last considerations if you're going to pay yourself a dividend. So number one is that it's not a deduction from your corporate income, so you pay tax at the corporate level even though you've paid yourself a dividend. And lastly, you'll want to consider your own borrowing needs. So if you're up for a mortgage or you're looking to buy a house over the next period of time, dividends are likely not going to be the optimal type of income for you. Banks are still going to want to see that consistent income, and salary is the way to go if that's the case. So I've covered some basic examples so far, but you're probably having some questions swirling around in your head about how your specific situation is a little bit different. Stay tuned because I'm going to cover Avalon's situation and how we pay ourselves a combination of salary and dividends and our share structure to make that happen. So the ultimate question that we get is, which one is going to make me pay less tax? And this is a challenging question to answer because there's really minimal savings in tax on either side, salary or dividends. I mentioned before about the CPP savings, so that's a $5,000-ish savings that you'll get if you're not paying yourself salary and you stick to dividends strictly. Okay, so there's minimal tax savings between paying yourself a salary and paying yourself dividends, and this is by design. Now, I'm gonna get a little bit nerdy on you, but the Canadian tax system is a beautiful thing. It's based on a concept called integration. And what you need to know about that is that this has already been contemplated in the Canadian tax system. What they're looking for is that someone getting paid a salary, an employee of a company, and an owner of a company should pay the same amount of tax. On the company side, the dividend payment It's taxed a little bit at the corporate level, and then the rest is taxed at the personal level. And overall, you pay about the same amount of tax. Now, there's small differences by province and year by year based on tax rates, and there are minimal savings to be had on one side or the other, but typically aren't enough for us to really go down that path. The other considerations that I mentioned before are much more impactful to whether you pay yourself a salary or dividends. Here's how we pay ourselves at Avalon. So if you're unfamiliar with Avalon, we have two business owners, Paul and myself, and we have run a corporation called Avalon Accounting, Inc. We are the 50-50 owners of that, and our share structure is Class A's, which are voting non-participating shares, meaning we can't pay ourselves any dividends to those shares. We have Class B's and Class C's, and those Class B's and C's are 100% owned by Paul, B's, 100% owned by Joe, C's, and those are participating non-voting shares, which means they can receive dividends. So the advantage of a share structure like this is that, yes, we have our A's, which are voting and our control, but we can also differentiate our dividends by owner. So how we pay ourselves is that we pay ourselves a salary for the work that we do within the company. That's us acting like employees, attending meetings, having client meetings, doing the work. So we pay ourselves as employees through salary. That gives us steady income. We pay our income taxes on that every single month and never see it in our paycheck. And we're ready to go at tax time when it comes to our salary portion. We also pay ourselves dividends when we have profit to share amongst our owners that we don't want to reinvest within the company. So paying ourselves a dividend really is based on the ownership and the profit that we've created within the company. This is great because we can transfer that almost as a bonus for our ownership of the company once every few months, and we put some money aside to make sure that we have our tax bill set away when it comes to tax time. So this setup of paying ourselves a little bit of salary and a little bit of dividends works really well for us. Some other considerations for you might be your stage of business. So if you're new and you don't have the resources to have a payroll system set up and you don't want the administrative costs with that, maybe for your first year you just pay yourself dividends. So that might work in that scenario. In another scenario, you may be saving for your home and you want to be able to qualify for a mortgage. Maybe you go more towards salary and pay yourself all salary for a number of years to establish that income. Lastly, maybe you have a really growing business and you're seeing lots of profit, but you want to reinvest that money back into hiring more people and buying more equipment. You won't want to be paying yourself a dividend in that scenario. What you want to be doing is accumulating that cash to reinvest back into your business. We work with all kinds of entrepreneurs in different situations, and the salary versus dividend question is really based on their unique circumstances. So that can be lifestyle goals, business goals, profit, share structure, you name it. We take into account everything when we speak with these entrepreneurs about paying themselves salary versus dividends. So there you go. There's the pluses and minuses of paying yourself a salary versus dividends. I hope I've addressed your specific circumstance, but if I haven't, please post in the comments below. I'll do my best to answer all the questions that I can get to. Until next time, get out there and build that thriving business. We're really excited to see what you can create.
My name is Alan Madden from Madden Chartered Accountant. In this video, I will discuss the do's and don'ts of buying your home with a corporation and how you can purchase it with your company's money tax-free. The strategy I will demonstrate to you involves taking money from your corporation, which will be given to you on a tax-free basis in order to help pay down a significant portion of your future home. The wrong way. Before I explain how the strategy works, let's look at the wrong way to buy a home, which is a common mistake that many business owners make. The wrong way is to have your corporation pay a bonus or lump sum salary payment to you. This way is ineffective because approximately half of the funds must be paid to the Canada Revenue Agency in order to pay for payroll taxes. This leaves you with only 50% of the money available to make a down payment on your home. The right way. The right way to purchase a home is to use an employee home purchase loan. This can be achieved using the following steps. Step 1. Get a loan from your corporation. Your corporation will make a tax-free loan to you. The loan must be supported by a written agreement, and there must be a mortgage in place. This means that the home is used as collateral for the loan. That's not really a big concern because it's highly unlikely that you're going to default on your own loan. Step 2. Pay a reasonable amount of interest. You must pay a reasonable amount of interest to your corporation in respect of the loan received. The amount of interest charged should be equal to the market rate of interest. For example, the market rate may be 2, 3, or 4%. To determine the market rate, you can refer to the interest rates charged by major banks for mortgages. Step 3. Determine the repayment terms. There must be a reasonable repayment period for the loan, such as 10, 15, or 20 years. To determine the repayment period, refer to the amortization periods offered by major banks on conventional mortgages. Step 4. Verify your employment. In order to qualify for an employee home purchase loan from your corporation, you must be an employee of your corporation. As such, an employment agreement is required, and you must be receiving regular payroll checks. Problems with newly constructed homes. According to the Income Tax Act, once money is taken out of your corporation, it must be used immediately to make a down payment on your home. Unfortunately, newly constructed homes purchased from a builder can take 2 to 3 years to complete. Thus, if you're planning to purchase a newly constructed home, you may not be able to use this specific strategy. In conclusion, using the employee home purchase loan is an excellent strategy that allows you to take money from your corporation without paying any tax in order to put toward a down payment on your future home. While this tax strategy sounds simple, the CRA will include the loan proceeds in your taxable income if any errors are found or if it does not comply with the Income Tax Act. Therefore, it is important that you consult with an accountant to ensure that this strategy is implemented correctly. For more tax tips, please click on the subscribe button below and visit our website. Feel free to follow us on Twitter, Facebook, Instagram, and Google+. Don't forget to like, comment, and subscribe to our YouTube channel. Hi, my name is Alan Madden from Madden Chartered Accountant. I am releasing a series of videos to help you receive financial assistance from the Government of Canada due to COVID-19. Most importantly, I hope that you and your family are safe during this difficult time. This video is about the Canada Emergency Small Business Loan. The Government of Canada is providing loans to small businesses in Canada of up to $40,000 due to the COVID-19 crisis. Eligibility. Small businesses in Canada with an annual payroll in 2019 between $50,000 and $1 million are eligible for the Canada Emergency Small Business Loan. Hi, my name is Alan Madden from Madden Chartered Accountant. I'm releasing a series of videos to help you receive financial assistance from the Government of Canada due to COVID-19. Most importantly, I hope that you and your family are safe during this difficult time. This video is about the Canada Emergency Wage Subsidy for Canadian employers. The Government of Canada is providing a wage subsidy to Canadian employers of up to 75% on the first $58,700 of an employee's wages. This equates to a maximum wage subsidy of $847 per week per employee. Let's look at an example. Karthik Welding Inc. is an Ontario corporation with 4 employees, including the owner. Each employee makes $3,000 per month, but Karthik, the owner, is paid a salary of $7,000 per month. Karthik Welding Inc.'s revenues have declined by 15% in March 2020. What is the amount of the wage subsidy that Karthik Welding Inc. can receive? According to the table above, Karthik Welding Inc. will receive a wage subsidy of $10,138 for its 4 employees. Karthik's salary is over the maximum of $58,700, and so his subsidy is limited to $847 per week or $3,388 for a month. Special rules for owners. As an owner of your own company, you may also be receiving a salary or wages. However, a special rule applies for owners and their family members. Let's look at an example to better understand this rule. Karthik of Karthik Welding Inc. was never employed by his company. Instead, he collected dividends each month from his company. However, thinking that his company could collect the Canada wage subsidy should he become employed, Karthik Welding Inc. began paying Karthik a weekly salary starting March 15, 2020. Unfortunately for Karthik, he was not employed prior to March 15, 2020, and so Karthik Welding Inc. is not eligible for a wage subsidy in respect of Karthik's wages. Eligibility criteria. Registered businesses in Canada can apply so long as they can demonstrate their revenues dropped by 15% in March and 30% in subsequent months. Hi, my name is Alan Madden. I'm a chartered accountant and a tax expert in the Mississauga and Toronto regions of Ontario, Canada. The topic of today's short video is tax on real estate sales in Canada. If you own a rental property or a real estate investment property and have sold or are thinking of selling, it's really important that you watch this video because I'm going to share some very useful tips for you. When you sell real estate property in Canada, that's an investment, you're required to pay capital gains tax. Capital gains tax simply means that only half of the gain or the profit on the sale of your real estate investment will be taxable. So if you are in the highest income tax bracket, let's say the gain is $100,000, only half of that gain of $50,000 would be taxable and would be subject to the rate of 46% if you're in the highest tax bracket, which effectively means that 23% of the entire gain is taxed, or $23,000 on a $100,000 gain. How do you compute the gain on the sale of real estate investments in Canada? It's a very simple formula, being the net selling price minus the cost. The net selling price is the sale price on your purchase and sale agreement, less legal fees paid to your lawyer and commissions paid to your realtor. The cost is computed as the original purchase price, which should be shown on your purchase and sale agreement when you first bought the property, plus land transfer tax paid, plus legal fees paid on closing, and plus any improvements that you made to the property. What are improvements? Improvements are something that improve the quality of the property or have a long and lasting benefit. For example, if you replace the windows on your property, that's an improvement because it has a long lasting benefit. Windows usually last 10 to 20 years. That would be a capital improvement, which would increase the cost of your property. Another example of an improvement would be replacing your old gas furnace with a high energy efficient furnace. That improves the quality of your property and therefore is an improvement which would increase the cost of your real estate investment. Repairs are not improvements and they do not increase the cost. Repairs could be fixing a leaky faucet or repairing a squeaky floorboard. Repairs are deductible but do not increase the cost of your property. Another major point to keep in mind when you are selling real estate in Canada is that any tax depreciation, also known as capital cost allowance, that you claimed in prior taxation years must be recaptured or included in your income when you sell your rental property or real estate investment. For example, if you claimed $100,000 of tax depreciation in your prior taxation years, then when you sell the real estate investment, the $100,000 of previously claimed depreciation will be included in your income. Remember that when you sell a real estate property, rental property, it must be reported on your tax return, both the capital gain and the recapture. Because the taxation on the sale of rental properties and real estate investments can be complex, I encourage you to engage the services of a chartered accountant who can better help you determine the implications. If you found this video useful, I encourage you to visit the link shown at the bottom of this video, http://maddenca.com, and also look at the URL at the end of this video and get access to your free report on 20 free tax secrets on how to beat the tax man. So go ahead, visit my website, get access to your free report, and save your Hi, my name's Alan Madden. I'm a chartered accountant and a tax expert in the Mississauga, Oakville, and Toronto regions of Ontario, Canada. Today's short video is called 5 Things Canadians Need to Know About Buying U.S. Real Estate. If you own U.S. real estate or you're planning on buying U.S. real estate, as a Canadian, you have to watch this video. The first thing you need to know is applying for an individual taxpayer identification number. You need this number for every tax filing that you have with the IRS. To apply for an individual taxpayer identification number, complete Form W-7, which can be found on the IRS's website. Attach with Form W-7 a notarized copy of your Canadian passport. you can get your passport notarized by a Canadian passport office or by an IRS acceptance agent. The second thing that you need to know is withholding tax. The IRS levies a withholding tax of 30% of the rents that you collect. So for example, if you own a property in the United States and your gross monthly rents are $1,000, then 30% or $300 must be remitted to the IRS in the form of withholding tax. Now that doesn't seem really fair because it doesn't take into account any expenses incurred in connection with running the property. So how do you get around this? Well, that brings me to point number 3, the net rental election, which essentially is a waiver or an exemption from withholding tax. By filing the net rental election, you pay tax on the net rental income earned at graduated tax rates. That means expenses can be deducted in arriving at the net rental income. Expenses include mortgage interest, property taxes, utilities like gas, water, and hydro, home insurance, management fees, repairs, depreciation, and so forth. To apply for the net rental election, complete Form W8 ECI. This form is called Foreign Person's Claim for Exemption from Withholding on Income Effectively Connected with the Conduct of a U.S. Trade or Business. You have to file Form W8 ECI with your property manager or management company. Today's video is about Canadians working abroad and taxes. This video is going to be broken down into 2 parts: Canadians permanently working abroad and taxes, and Canadians temporarily working abroad and taxes. Let's talk about those who are permanently working abroad first. The first thing that you need to do as a Canadian who is permanently working overseas is determine your residency status. Are you a resident of Canada or are you a non-resident of Canada? The CRA looks at 3 primary factors when determining your Canadian residency status. Number 1, where is your permanent home located? Number 2, where is your spouse and or common law partner located? Where are your children? And number 3, where are your material personal possessions located? Let's take the example of John Smith, who left Canada 13 years ago to work and live in the United States. His permanent home, number 1, is in the United States. His wife and 2 children, number 2, are in the United States. And his material personal possessions, number 3, are in the United States. Material personal possessions for John are his car, his boat, his major household appliances, and so forth. In this case, John Smith is clearly a non-resident of Canada. The secondary factors that the Canada Revenue Agency looks to when determining whether or not you are or are not a resident of Canada are Canadian driver's license, Canadian bank account and credit cards, health insurance card, for example, your OHIP card. If you maintain all of the above, you are likely going to be considered a resident for Canadian tax purposes. So now that we've talked about what the factors are for determining your residency status, what happens when you leave Canada? There are 6 things that you need to do as a Canadian working abroad when or before you leave Canada. Number 1, you need to file a departure tax return. A departure tax return is like a personal tax return due on April 30th, but it has a few special forms attached to it. On your departure tax return,
it's really important that you indicate that you emigrate, the date that you emigrated from Canada. That is the date that you left Canada. Number 2, you could file Form NR 73, Determination of Residency Status upon leaving Canada. It's not mandatory to file this form with the Canada Revenue Agency. However, as a Canadian working abroad, you may want to complete this several-page questionnaire and submit it to the CRA for processing. That's because once the CRA has processed it, they will give you a determination in writing as to whether you're a resident of Canada or whether you are a non-resident of Canada. So you're not left in limbo guessing. Number 3, you must tell the CRA that you no longer want to receive payments or credits for GST, the Canada Child Tax Benefit, and the Universal Child Care Benefit. If you don't do this and you continue to work abroad and receive these payments, and if the CRA finds out, you will end up having to pay all of that money back, plus interest, plus penalties. That's something that you certainly want to avoid. The 4th thing that you need to do when you leave Canada is that you must tell the CRA a complete list of all of the Canadian assets that you own immediately prior to departure. Pardon me, that's Canadian and foreign assets immediately prior